Multiple time frame analysis. When we look at the chart or the graph, let's actually look at trade. How much money we are making, right? We're not that making that much. Actually, in the morning, I've made this much. Not in the morning, but I closed just not so long ago. Anyway, let me explain multiple time frame analysis. If you're a beginner, we're using BozzaTrader 5 section charts, and the asset that we're trading NZD USD, which is New Zealand dollar versus the US dollar, which is the asset that I love so much. And we also have gold, which is another asset that I really love. Euro USD, Volatility 75, US tag, there are many assets that I love. But then let's understand multiple time frame analysis. Let's tap. All right, let's change time frame quickly. All right. Let's actually go to a daily. Let me explain. But then, please do something for me so that you can actually do the analysis together so that you understand much better. And if you're a beginner, what is a multiple time frame analysis? What is multiple time frame analysis? Okay, multiple time frame analysis simply means that we are analyzing a US dollar versus the Singapore dollar, the time frame. Simple. But when we change the time frame, remember each and every candlestick here represents the time frame that we're in. So in this case, we're in 6 hour H6, which is 6 hour, and every candlestick represents 6 hours. So that's number one. Number two, in our journey to understand the multiple time frame analysis, we must understand structure. All right, structure, the condition the market creates. Simple. And number three, it's understanding price. We're talking about price action and looking in terms of the candlesticks pattern that the graph creates. In this case, we have engulfing. That is the candlestick pattern that I started with based on my experience when I started Forex trading. And it was the only candlestick pattern that I really liked, and I really understood it as to how to use it effectively. Now, let's keep checking here. Anyway, remember we are risking, so we must practice risk management. Anyway, let's change. Let me just show you the time frame. Let's just tap on this time frame over here. All right, let's tap on this one. If you're using an iPhone, please, this is the same thing that I'm going to explain here. From 1 hour to MN, which is the monthly, the time frame that we use to mark the structure, which is 1 hour to MN. Simple, right? From 1 minute to 30 minutes, that's the time frame that we use to look at the candlestick pattern, and which is 30 minutes to look at the candlestick pattern for confirming a buy and a sell. But it does not mean that we cannot use this time frame to put it here and analyze it. But the way why actually Bozza is separating the time frame in this way? I separated the time frame in this way that the profit from this time from 1 hour to MN, it's more than the time frame 1 minute to 30 minutes. Okay, let me clarify this for some of you who need some more clarity, because I really trust that it's better that I give you the information and you really understand as to what you need to do. Okay, let's look in this case. If you're using 1 hour to the 1M, you have less trades. Okay, you will have less trades, less risk in terms of how many chances you get based on these trades, and you're expecting to take more profit and using less lot size. Okay, you'll use less lot size. Then when you compare here, you'll use more lot size to compensate the difference in profit that you'll get from here to here. So if you use more lot size here, you're expecting less profit. You're expecting less profit in number of points. The profit is number of points. You're expecting more trades. You're expecting more trades here, and you're expecting more risk because you have to take more trades. All right, simple and easy. So that is why I recommend this high time frame. And this high time frame will show you how, if you are day trading, you're scalping, or you are swing trading or position trading. All right, now when you look at multiple time frame analysis, I want you to understand something which is simple and easy. MN, which is the month, is greater than a week. week is greater than a day. Daily is greater than H12, which is 12 hours. 12 hours is greater than 8 hours. Simple. Same goes with the time frame here on below, right? I trust you do understand that one. So we use this smaller time frame to confirm an entry. We use this time frame to mark a structure, but we can still use the smaller time frame. So in this case, we're on 4 hours time frame. That's the time frame that we're using at the moment. So if we're using 4 hours time frame, we look at the structure, we look at the structure, we look at the structure below, we look at the structure. The structure is simple, all right? But understand period separators, because here, if you look, we're separating week 1, week 2. When we trade, we're trading based on lows, we're trading based on high. So if you change the time frame to a weekly time frame, remember weekly is high, it's actually greater than the what? The daily time frame. So now if you're on a weekly time frame, we look at here, we look below here. This is 2025, this is 2024. If you're on a weekly, we're now separating the years. We are now separating the years. If we change to a daily, we now separate May, April. I trust you to understand that one. All right. So now, when you look at multiple time frame analysis, we have to understand the highest of the month and the lowest of the month. And then when we have the high of the month and low of the month, then that's all set. If we compare April and May, we had a higher of the month, and we had the high of the month, we had a sell all the way down to the mid lowest of the month of April. But then we had an open price here on May with these two candlesticks that they formed here, and that they formed the lowest price of the month because it's the new month. So we must have a low price and a higher price. So our expectation is to trade the higher price and lower price. Easy and simple. So the mid lower price or the media higher price that we're trading between this higher price and lower price, it's a scalping mode, but it's not really a scalping mode because some of you will be confused. Bozza, you are saying scalping mode. What's happening here? All right. Based on the time frame that we're using on a daily time frame, we are expecting this graph to go all the way down to the lower price of the month so that we can actually have a buy to the higher price of the month. Simple. So now, Bozza, please explain this multiple time frame analysis. Okay, let me continue to explain. Let me go to 4 hours. All right, I'm in 4 hours right now. All right, let me just use 4 hours because 4 hours is much easier and straightforward. I've made a sell here. I've expected this graph to go all the way down here because it's a selling entry. How did you confirm the entry? Let's change time frame to 5 minutes. 5 minutes, we have this candlestick here, which is an engulfing pattern. Stop loss, I placed it above. And let's go to chart here. You can see already we are making profit. If you go to chart here, you can see we are still continuing to go down, but it does not guarantee you that you will profit. It's a chance that you are taking based on the analysis and also the risk management part, because it's important to actually manage the risk. You're not going to get these chances each and every day, but you need to wait for the time to come for you to trade. So when it comes to multiple time frame analysis, you must make sure that if you see the structure on a daily time frame, we are selling. Whatever that you do, you must keep on selling. You don't buy if you see a structure in 4 hours saying that we are buying, but the daily structure says that we are selling. You can take that, but it will be not a recommended strategy for you to use. So in this case, we're on a daily time frame. I expected this graph to come to this lower prices here. All right. On a weekly, we have reached the highest of the year, which is 2025, and we have not reached the highest of 2024, which means if we continue to come here, we're still gonna go all the way down up until here. But we have managed to have the lower price of the year here, and it went all the way up to the high price of the year. But now we are expecting to actually create or move from the higher price with a structure. We don't just move. So there's no structure that shows that we have to move down. Though we have a higher price, but we don't have a structure. So if we go to a daily time frame, we have a structure that shows that we have a down movement in a higher of the day, in a higher of the month of May, which is easy and straightforward to understand. So I trust you to understand that one. So in this case, we can go to 4 hours and we have not reached the high of the month here. We're expecting to take a sell here, and since we did take a sell, we are expecting to take another sell over here, which is going to be in a daily time frame, and that will be a position trade going all the way down to the lowest price. Simple and easy. So as I've explained to you, multiple time frame is easy to understand. You can see here I had a buy here of 0.01, stop loss is below here, but I had to confirm the entry over here based on the price action. So remember, price action, we're talking about the candlestick, or price, we're talking about the candlestick structure is there in our time frame. And then whatever that I do here, I don't make sales. I don't make sales based on this period separator. I'll only be interested to make sell here. That's the first start. But then don't limit yourself not to actually take the selling trades here, which is the short-term trades, all right, so that you can actually profit when the graph makes a turn. So I trust you do understand as to how to do multiple time frame analysis. It's simple, but it's not easy if you don't understand the period separators. You don't understand the time that, if right now you use a high time frame and you see the structure in high time frame, whatever that you do in smaller time frame, it must be according to the high time frame, because the high time frame will tell you where we are going. So do not go against the higher time frame. But then if right now you have gained the knowledge, you understand, then you'll actually be a good trader. So anyway, I trust you do understand. If you have any questions, you'd like to join my mentorship program, and you'd like to be part of our trading journey, let me know in the comment section below. And let me know if you have any difficulties in actually understanding multiple time frame analysis. And if you're really looking to actually make money, please be safe. Love you all. Stay blessed, and make sure that you subscribe to our channel. We have a YouTube channel, so make sure that you come to this YouTube channel and you click on subscribe, so that you can actually be part of the family, Bozza family. And now I love you all. Stay blessed. I'll see you on another tutorial. If you have any question, let me know in the comment section below.